Hello, everybody. This is the Opinionated Trader. And boy, did we have a day today in the stock market. Stock market was so dysfunctional, it affected my entire trading day to wake up to all this dysfunction on these various charts where they halted the trading, aggravated me. I couldn't drink my soda correctly. I couldn't eat my salt and vinegar chips correctly. My Reese's Pieces were not working together with me either. Everything just went wrong. All because of this dysfunction. Now, in my opinion, this is consolidation. Look at it. And I talked about this in my chart analysis the other day that this happens in the middle of trading. It's not, an anomaly. We see long wicks all the time. It's a big order coming in. It's a big order going out, whatever. But we see this all the time. This was, in others' opinions, a technical issue. A technical issue for stocks that had earnings or will be having earnings. To me, you threw off the entire charts. You threw off the entire analysis. I couldn't even analyze the previous days because everything was just congested because it was clearly set for a huge squeeze. It was clearly set for a big move, and people peeped that, and they had their things ready for a put or a call, whichever way it went, and boom. They have essentially hurt our feelings. They have hurt our feelings, and they have said this is not a, situation where we can honor what had happened. And it was a technical issue that our programmers will be correcting in the code, whether that be Java, whether that be whatever the other ones are. But clearly, y'all, honestly, it's range trading. It's ranging. It was running out. It was time for a big move. Let's look at some bigger charts here. Let's go to the years. Let's do the 3 year. Let's see was a gap with these drops. Oh, let's look at this closely. Now this was who was this? Visa maybe? Somebody, whoever these. Okay, let's look at this. Now look at this. That closed that gap. Looks like it closed the gap to me. It looked like it closed the gap from just about, let's see here. Good, give or take, yeah, right there. Something all the way back in November. It closed the gap to me, and it traded like garbage, complete garbage. All of them traded like pure garbage. And look at here. Oh, what do we have here? Another gap close. Almost going back all the way sometime in July. How convenient. Please. Garbage. Regardless of those facts. At the end of the day, whatever they said. Now, I want to go to Bank of America because that's what I have been trying to trade. But guess what, you guys? SPY just didn't act right today either. But let me just look at Bank of America. Now, my little thing you told me, hey, you get in the call at 9:40. But this is my issue with my little thing right here now. I'm an empirical person. I do research. I do, surveys, and I do, you know, life experiences. I analyze what you say. I read your body language. I make note of whether your eyes are stretched or whatever. Okay, sociologist, so to speak. But the only issue I have with my particular indicator is this. It told me to get in this call for Bank of America. Still early, might I tell you, at like I said, about 9:40, give or take, 10 minutes into the market. And if I would have held on until they said get out, that would have been almost an hour and 50 minutes. From 34.16 or 12 or whatever to about 34.79. Easily 50-cent move, okay? Now, if we were to go to the option for, I think 34, I'll say 34.5. Remember the little trick we do? Copy the option, put it in. Let's go take a look. It's in a book. Now, here we see that this is the chart for that particular option. Now, my thing told me to get in at 9:40. But it will show up here too as well, because like I said, it reads it just like you got your charts and stuff, but it can be a bit confusing. It told this thing here roughly about, on a 1 minute chart, this was about 10:09, but mine told me, like I said, about 9:40. So when the stop was right here. Now this, hold on y'all, this, am I on the right one? I'm gonna do something right quick, you guys. Just give me 1 second, because I want y'all to see what I'm trying to show you, because it's important. I don't have time to be trying to figure out what went wrong and what went right. I need to see what's going on here. Okay, my thing told me to get in about 9:40, so it must have been right here. Okay, it was give or take 12 cents. I don't know if I'm on the right strike or not. 34 or 34. I'm on the right strike here. Hold on, guys. Lost my train of thought here. Bank of America, 34.4. Yeah. Okay. It told me to get in about around 12. So that's why I'm trying to find where the 12 is. I guess it's somewhere here. But that's not really in alignment with my chart. So I'm just going to say they told me to get in at 19. Yeah, I'm just going to do that because it says 12 over there, but I'm looking at 19. But no matter what, get in at, it said 9, let me see, 9:40. What is 9:40? 9:40. 9:40. It's saying 2, but I saw 12. No matter what, I would have preferred to get in down here when it was 13 cents, but there were some that were as low as I want to say it was 12. Maybe I'm on the wrong one. Let me go back. Now bear with me. This is real life. Could it have been? No, it has to be this one. Oh, it might have been this one. It might have been a 35. It's the wrong one. That's why I was like, no, this thing is not right. Okay, that's the one. This had a low of 3 cents, y'all. And we did our math yesterday. This had a low of 3 cents, right? And a high of 25. So you could have purchased 10 contracts right at the open for 30 cents. Okay? Which is basically $30. All right? And you could have made $222 from the time you got in these positions, right around the time it opened. It's kind of hard unless you got something set up to catch those moves. And you would have got in there about, let's see, 9:30, got out about 10:58, so you had to stay in there at least an hour and a half. You could have took $30 and made $220. before 11 o'clock. And then you could enjoy the rest of your day. Then, after it got to that high, once you knew that it was going to pull back, and it got to a place where you were comfortable saying, I wanted to get a put. Now, let's go see what my little chart says. When to get in the put. Oh, I got to put a little study back up. Okay, it said get in the put. It's got to be fine. Maybe not. That's what I'm saying. Now, I would have wanted to get in the put probably back over here. And I'm not saying that it didn't pop up and tell me that, because this is like not in real time, because this is based on an X amount of number of candles per calculation. So I still don't believe though it put me in a put over here. I just don't. But let's just go ahead and accept that it says something about 239. Okay, so at 239, getting in a put, you would probably want to get in a, I say 34.5 put. So let's just go ahead and do this. Okay. And I think I said 239. Okay, how much was, what I'm about to do, you guys. At 239, how much was this put? $239. See, it was 26 and got to 36. So, I probably would have been a little upset about that one. Let me see how much it costs. I don't know if there was enough. I don't know if there was enough meat on the bones for that one. It still made some progress, but I think it pulled back, of course, because it kind of did go back up. But you could have still made money, but it wasn't as successful in my opinion as getting in from here to here, and then telling you about 240. Getting a put right here. I want to believe that my chart told me before here, because there was already clearly this pullback, unless it got computations got off here, and then it was like, look, no, get in the put right here. But I would have been happy to get in a put here and then ride that all the way to this point. Well, this point here. So I do like my little study, but the entries to me, they're just a little off. I like to get in it when your foot hits the floor. You just start running, and I didn't have that opportunity. So, like I said over here, it was saying something about it is not even. I'm sorry, guys. I told you this was a jacked up day for me. I mean, I'm not the best when it comes to certain things anyway, but it's just been a rough day. Seriously, it's been rough. So, I'm trying to see how far back it's telling me to do. Yeah, I can't even see it on here. Like I said, it recalculates itself after a certain amount of time, and it's calculating, in the aftermarket right now. So that defeats the purpose of what I'm showing you or trying to explain to you. But you still get my point. Getting in these lotto positions, as I will call them, and I have heard from other individuals that do teach actual trading classes and things of that sort. You don't have to wait till Friday to have a lotto. What you must learn to do is I'm not telling you to counter trade. Remember, this is not financial advice. This is entertainment. in informational purposes, but we are not responsible for any losses, trades, etc., anything associated with the stock market, implied, written, or any other form. Trading is a risky business. If you don't have the money to lose, do not worry about trying to win it. I'm just being honest with you. You got to study, apply yourself, paper trade, do everything you can to learn a certain strategy before you start putting in money that you don't want to lose. I promise you, do not utilize your bill money, your kids' tuition, your light bill, your phone bill, your grocery bill, your oil change, none of that. Do not use any of that money to trade. Okay? Because when you look back and see how much you lose, because you're going to lose some, just as much as you win some, and you add that stuff up over time, it's going to break your little hearts. So don't do it. You have been warned. Trading is a risky institutional process that many people have gone to school and have done extensive learning to cut their losses and to manage their accounts. If you failed in that endeavor to know how to do that successfully, trading will not be something that you will like. You must learn, as someone in another class said, before you earn. Patience, my grasshoppers. You will make it. But don't jump into this because it is literally a labyrinth that you must learn to navigate with your eyes closed. Real, real. How much have you lost? Like I said, you don't listen. That fall you feel when you learn how to walk, trust me, you'll feel it in your pocketbook if you start trying to walk too early in this trading. Learn the process. Plenty of YouTube videos, plenty of different Discords, Patreon, wherever you call all that stuff, all these different places you can learn. Please study as much as you can. There are easy ways to trade that does not require extensive things. Some people just trade breakouts. Some people just trade retracements. Some people just trade moving averages. Some people just trade RSI, MACD. Some people use price action. Did it break above? Did it break below? The open and the close. Stuff like that. Simplify your process. Don't have all the stuff on your chart like me. Do better than the people you're listening to. That's what we want you to do. Because we don't want you to make our mistakes, okay? Now that was long. That was your professor getting off tangent. Okay. And then getting back on. Alright, moving on, y'all. I'm rambling. Basically, what you see here was Bank of America did have a good trading day in regards to what it did. And what I'm just going to do, you guys, and I'm just going to use one chart because this two chart stuff gets on your nerves sometimes. But you do need to have a lower time frame and a higher time frame. Most of the time, your 1 minutes are for certain moves that people cannot see on higher time frames. They may look to see what resistance is going on, supply and demand, stuff like that, and to see the fake outs, the fake breakups or breakdowns. 10, 15, 30, 45, 1 hour, 2 hour, 4 hour, 1 year, 2 year, 3 year, 5 year max are good time frames to see the overall behavior of the stock on a larger scale. However, it is important for you to understand, as you see here at the top of my screen. Yeah, see? Learning is important, you guys. Learning curve number 1. Know your platform. Try this again. All right. This up here shows you that in trading, on the 1 minute, on the 2 minute, and the 3 minute, it could be very well a bear. This chart is saying that I'm on a 1 minute chart, just saying bear 5, telling me technically that on the bear chart, on the 5-minute chart for Bank of America, it is technically a bear. Now for this little indicator I have here, it's red for a bear, green for a bull, and I think the yellow is for neutrality. But that is pretty much a danger zone. But let's just, you know, look at a 5-minute chart compared to a 1-minute chart. You have various information from each of these charts. If you were to look at that 1-minute chart and then you look at this 5-minute chart, look how much more cleaner that looks versus all the jumbo rumbo that is going on, you know, with my other chart. And you can see more, pattern behavior and things of that sort. So things are cleaner. You can just see we had an uptrend. Here they said buy a put. Stayed in the put, stayed in the put. Didn't get out of put. Went from 34.75 all the way 34.41, give or take a few points here and there. The official high was 34.79. My little thing said get in 34.72. Sometimes those points matter, sometimes they may not. Depends on the premium, time, and many other factors. But I would have preferred something here, but it is waiting for more of a confirmation compared to me, which you can respect. But like I said, I just would have preferred to get in a call down here or down here, not right here. But I know why, because when this candle broke it, it says, okay, it's confirmed. We can say it's safe to get in. And when this candle broke a little here, say, okay, it's good. We can, so it's for confirmation purposes, but some people can peep that something is going in a downtrend, something's going in an uptrend a bit more quicker, and they get in positions a bit more quicker. So again, the higher you go, the more you can see why some positions will say, hey, I think at this time frame, this is more of a bull. No, this is more of a bear. So we still clearly see that this was a downtrend. You don't have all that that you see on a 1-minute chart. Again, much cleaner, clearly consolidation here. So we're at 10 minutes. Now, bullish PSAR, they're probably talking about something that's happening in the aftermarket. So don't pay attention to this. Again, I'm not on a time lapse. This is aftermarket hours. Things did go back up and it was more bullish. So, but you clearly see before the market closed that it was more on the downtrend. I had the thing tell me this is time for you to short, stuff like that. So I have all these little things on my chart, but like I said, one of the most important things you have to respect about trading is you don't want to spend so much time trying to figure out what is the indicator trying to tell me. What is the price really trying to tell you? If you spend so much time trying to read the indicators and putting that indicator with that indicator with that indicator, you're going to lose the price action. Now up here at the top, I have these different indicators that try to give me information about where the price could go. But this is not a constant number. It changes throughout the day. So it doesn't open up and say, hey, this is going to go to 34.37. So even though it rises up, it's going to go to 34.37. Now I have some settings in the past that I can't remember that did give me some deep down the road information almost 30 minutes, 45 minutes in advance. But one of the problems I didn't do, which I informed you all of in my previous video, when you change something, write that change down. Because if you find your trading edge or your holy grail for trading, but you don't write it down, then you go to sleep, you go hang out with your friends, you go watch a movie, you go out to eat again, you go to church, you go to work, and you're like, wow, what was that thing? You're not going to remember. It's over. So write it down, and it'll make your life a whole lot easier because you won't sit there trying to figure out, man, what happened to my thing? Like, you'll know exactly what you did in order for you to basically get that perfect trading edge just for you. Okay, so we're going up higher. We're going to skip the 15 minutes, just go straight to 30 minutes. Okay, now if you were trading today and you just was like, I ain't switching up. You know, I told y'all I have, Fortune 500 and when it's necessary and whatever. You're not gonna sit here and be like, I'm just gonna sit here and I'm gonna be cool about it. When this thing pull back, that's when I'll get out. Okay, if that's you, that's what's up. Because guess what? Here we see that Bank of America was still green. It switched from red to green. It gave you an error and said, hey, I'm about to go up from the pars buy sell. And in the beginning, it said I'm down. All right. It went down to 33.95. But then it said kaboo, y'all. You got your arrow up about 10 o'clock, but that's what I'm saying. Like, I can't deal. But you still saw a green candle. It wasn't red. Now, can this candle change back and forth during live trading? Absolutely, because that one candle represents 30 minutes of trading. So eventually this arrow came in probably at the opening. Eventually this arrow came in and it stayed green. Then it traded sideways. Then the market closed. That's what they said on the 30 minute. You see what I'm saying? It's still bearish because guess what? This was the high, and then it traded down to this, then it traded down to this, then it went up, but it still never got back here and never got back here, so it is on a bearish trend. Okay? Now it went even further, basically after market, and it's currently trading at about 34.41. So not too far from where it officially had gone in the past. If you look here at the close, it was give or take there. It traded up, and went right back to it. So it's still ranging, and you can see that more when you're at a 30 minute. Now let's look at an hour. 1 day, 1 hour. Same concept. What is this gonna do? What is this gonna do? Back and forth, back and forth. Boom. This was more probably back and forth green and red because of that drop to 33.95. But then it moved. Boom. Boom. But not back here. Boom. Boom. That's what it did. Now, if you look at the bottom of my screen, even though I don't care too much for this setting, there's some settings that are dynamically set, but I could go into codes and change them, but I'm not going to get into that. For this means a strong bull, and this means a weak bull. I would have wanted them flip-flop, but that's not my circus, and you know the rest, okay? But here we see that this was a strong bull, and then this stepped in a little bit of here. Oh, we're trying, failed, okay? When you have various things that can assist you in your endeavor to, make sense of the chart, if you're having a little bit trouble with your chart, then that's what that stuff is for. But, it's not for you to sit there and be like, I'm going to rely solely on this. I'm going to rely solely on that. if you lost TD Ameritrade today, you know, you're going to have to read price action no matter what chart you're on, because as I said before, some coded in TD Ameritrade cannot go to TradingView, and some coded in TradingView can't go to TD Ameritrade. Someone has to read that code, take the logic, and put it in the right programming language for that platform. So, it's kind of like you're trying to do Android things on Apple phones or Apple things on Android phones. You can't do that. You you have to focus on what fits where. But in the concept of trading, you have to learn price action. If there was nothing on this chart, you should have been able to see that this went high, it pulled back to about 34.36, and it made an attempt to go back up, and it failed to get back to that high. It wasn't too far apart, but the concept is still the same. It was a lower high. It went down again, but it still could not produce. Now, it did try to go back here and failed, went back down, and continued on down. So you should have been able to see if there's more lower highs being made every time there's an attempt to go up. You got to see that this is appearing to look like a downtrend. Okay, so let's go to the 2 hour. And y'all, this is one of those rambling nights, so just, give me a pass, okay? We're now on a 2 hour chart, and it is giving you even less raw. It said, well, look here. We opened up with some little bit of confusion. We established a high of 34.79 and a low of 33.94. And this, honestly, with nothing really on it, is your ideal chart. Nothing is taking over your eye gate up here on the top of the screen. There's nothing all over the place completely. At the trading part of your screen, it's plain. You can just look at it and say, boom, this was hot, then it went down. You can start here and say this was a strong bull, kind of changed up and went on down, because this looks high, but it's going back to a time where it was higher, because we're looking at 2 hours. Remember that, over a time period. So for this day, however, okay, high was 34.79, low 33.94. If we were to go back to the previous day, that is a higher low. So that let us know that this was kind of going in an uptrend, due to the fact that this low yesterday was 33.72, but this low today was just 33.94. So that lets you know for this, that this was basically going in a higher trend. However, when we get to this candle, it showed us that even though this was in an uptrend, it was losing momentum. It was not transcending this candle, having preeminence over that candle. It literally just got kind of close and just gave up a little bit, then tried again and gave up, and then it just faded away. And then, of course, you can do the 4 hours, okay? And you can look at it that way. Still the same concept, just less details. Back and forth a little bit at the first part of the day, did push up, then slowly faded away. Still showed you the high 34.79, the next candle high was just 34.7, downtrend. And you can draw your own trend lines. I'm not the best trend line drawer, and you will see that in a second. But you could clearly see that this was going in a downtrend, and if it continued the way it was going, and your charts did not, break above this line based on your trend line that you drew, that it was going to continue. And if it came here and did this, it still wasn't above your trend line, you can draw your own trend line and see if this was going down. But you could go right here in the same breath to see for the current trend that this was a higher trend. That this was still bullish. But what you'll see when you get in other classes on the internet where they make triangles, ascending triangles, descending triangles, and all these other random shapes and sizes and what have you, that's letting you know two things. That it is coming together to sometimes either break up or break down. That it is trying to determine what way it's going to go. So you have sideways movement, and then you have situations where you really just have to keep waiting and waiting and waiting to see what the stock is going to do. And one example of that is SPY. Today with SPY was I spot a noise. That's what I felt today with SPY. SPY got on my nerves, and I was not personally trading SPY. My brother was trading SPY, and we were talking all day, trying to figure out what SPY gonna act right and do right, and SPY did exactly what it wanted to do. Trade up a little bit, trade down, trade up, sideways, sideways, up, sideways, down, up, sideways, down, sideways, sideways, down, and it just was playing with you. So if you had, let's say, a 397 or 398 put, okay, it was like, oh, we about to see. What you doing, SPY? Okay, breaking on down. That's how it was all day, and you can see, and this is why we tell you just look at this. Okay, it was no true, in my opinion, real ranging, going on here. I mean, what am I doing? Draw the line right here. Now I'll just draw the line right here. Okay. It really didn't break off and run until we all know when, after hours trading. This is probably about the most you had right here, and the best thing you had. Okay, and the best thing you probably had was right here. And as you can see, you guys, this happens between what 9:30 and about 11 o'clock. But most people do 10:30, but 11 o'clock, you do see some ranging. But for the rest of the day, we see clearly that this just traded sideways. Okay, and if you didn't get out, you know, around that time, I say right here, as it really started breaking. I would even take it back right here. That right there to let you know already this is going to be an annoying day. After this wonderful price action at the beginning, which is why some people don't even trade no matter what happens, some people do not trade after this area. They just like, you know what, I'm trading the opening. They may wait 2 minutes, maybe 3 minutes with the opening and be like, is this going to establish a high? Is this going to establish a low? Then they look at how it is from the previous day, from the opening, to the close from yesterday to the pre-market high, pre-market low, before the market opens, and they play from 9:30 to 10:30, then 10:30 maybe to 11, and they just stay away from the market. They make all what they need, and they just walk away. But I also see opportunities during this time frame because that's when some people get in there. Even though we stress to play the trend, again, this is not financial advice, it's my opinion. But most people try to say play the trend, and it is kind of dangerous to counter trend Just like with me when I was trying to get into SPY and get in the put when it wasn't finished with the call, you have to make sure that that trend is done and you can see that it's almost done with a certainty based on what you understand and what you know. And then you may decide to get in that opposite direction position, which is probably very cheap, and you're doing it based on highs and lows, resistance, support, supply, demand, moving average, whatever, however you decide to do it. And they play that, and I'll speak for myself. I've turned 7 cents into, which is $7, into $1.48, which is $148, and that was on a Friday. It was a luck play because I still don't have the analysis of what I did that day to make the decision to get into that trade. And that is why it's important for you to write this stuff down. So, but this is, an area that a lot of people may wait to get in those reverse things. But let's be honest, you could do that here too. It's just that when time passes, some of these options do become cheaper, and therefore you may be able to grab 10, 20, 30, 40, 60, 100, some people 1,000, 10,000, 100,000, whatever. But it is literally how some people make their money, okay? But this is just showing you the different ways data looks like on a chart to let you see what type of person are you really. Are you a long-term trader that just look like, hey, this is clear to me, down, get out, up, get out. Garbage, 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 garbage. Okay, wait for the next one. If you do the 10-minute, the chart looks even cleaner. Okay, clearly ranging here, something you want to see. This you don't really want to see. Okay, it still lets you know that there's going to be some form of a breakdown because look what it did. It did break up, and then you literally had some consolidation here in the aftermarket, and then it broke down, and it literally probably is going to go to my brother's strike that he had, and then by the time the market opened, it'll go right back up to maybe here or maybe here, but probably more so here, and then may go on to that 403, 407, and 410. So let's move on to the 30 minutes and look at that. And it helps that this stuff was circled and stuff because look, range, consolidation, some ranging, consolidation, breakdown. And then, like I said, the further out you go, the cleaner the data is, the less annoyed you are. You're just looking for certain things. Is it going to go down? Is it going to go up? Clearly, I kept going up. You can see that here with the trend line. We were to draw one. It was kind of bullish. Name of kind of, it was bullish, but then it started still. It still was a little consolidation here, but the trend was still bullish. Okay, got here, plateaued out, dropped down, but it still did make a new high, failed to go back to that new high, continued to break on down. And what did we say about trends? You can see that it went down. Okay, so now we're going to the 2-hour chart here. So here we are at 2 hours, even more so. Range, which you see with this indecision candle, a uptrend, got real high, failed to make another high here, short down. Okay, and then finally with the 4-hour, ranging, Let me remove all these drawings so you can see this better. Remove all drawings. No, that's not what I want. Remove drawings. Your drawings. Alright. Here, indecision, that's where we're seeing the range. Oh, we're gonna break on up. Oh, here we are. Down we go. Okay, so cleaner, and if you wanted to just look at this over the process of 10 days, this is what it looks like. And some people can honestly see what's their trending going on. They'll draw a trend line like this. They'll see this as, oh, consolidation. A decision is about to be made. Up, consolidation. And do it right, guys. But just all this right here. A decision has to be made. Boop. Up, consolidation. Up, a decision has to be made. And is the decision going to be the same as this decision? Where it traded all the way down to 387, which is a low that it has gone to. Okay? So that's honestly what people do. They don't have all this. Let's matter of fact, and I have all my stuff saved. I got backup copies, all that stuff. You know, so we're removing drawings, okay? Someone somewhere in their smart brain looks at this and says, "Oh wow," and they're doing dailies on the monthly, and they're just looking like this. Consolidating here, broke out, trended up. What's the trend? What's the trend? Oh, it broke below my trend line. Is this really a drop? They looked at all these places where it could have went. They said, well, did it break this line? Yeah, it broke that. 394. They went here. They said, oh, did it break that? Yep, broke that too. Oh, still going. Oh, wow, it went below 390. Oh, whoa, it's still going. Is it going to go that far? Kind of sort of did a little bit. But not quite there. So, because it didn't break below that, somebody said, well, this trend of a downtrend that was happening here very well could be over. So they was looking like, hey, it's breaking above. Up. Got past that on 390. Leveling up with 392. Okay, it might get out of here right here. Okay. A little better. Okay. Hmm. Oh. Oh. But you see, it pulled back here again. So are we going to be on a downtrend, or are we going to keep this uptrend? Okay, so somebody might say, I'm going to make this perpendicular thing that we learned in geometry class, where this is across and this is the same angle, this is the same angle, this is a 90-degree angle, so it's going to mirror this. Then this is perpendicular to this, and this outside angle adds up to make this. People smart like that, y'all. I remember it. It was probably one of my most fun memories of that class. But proofs in geometry. Okay, but anyway, And they're looking at this like, this is a diamond. And somebody's trading a diamond somewhere, somebody's trading a triangle somewhere, somebody's trading an X somewhere. I don't know. You know, they might can find some numerical values of this somewhere in their minds using imaginary numbers. It's possible. Nonetheless, this could keep going. This could keep going. This is how the trend lines can be made. And this could be yet another area where it is consolidating. It could consolidate here and hold a value um, at 396, and then it could just sit here and just relax right here. It could just relax right here and range trade and range trade. And if you're looking at this, this is on a monthly chart, and it can trade sideways for a month, ranging all in there. But in reality, that's what it is. And then we're going to say, well, what's it going to do? Well, let's look back 3 months and see what happened before in this area. Oh, we're at a resistance because we was at a resistance in the past, and we broke it up here, but we haven't even gotten to that area, and then we finally did, but it never got back here. So it's pulling back earlier based on what these two candles did in the past. So could it keep going down, or is it going to do something like this and then close this gap here and then pop up and go somewhere like that? Is it going to go down, then up? Or is it going to go straight down? Or is it going to go straight down and knock this out, but then just and knock out that 410? Or are we going to wait for it to knock out that 405? Or are we still trying to get back out of that 400? We did. We got the 402.65. And now we're trying to get here. 404 and the 405. See, that's why trading is a multifaceted concept. You really have to use a lot of logic, but based on some common sense things. Now, this is a high. You know what? I'm gonna use something a little better. We have this stuff in TD Ameritrade. This even better, okay? And I'm gonna remove all this stuff off my chart. You have price lines, okay? Price lines. Price line. There's technically more here, but we'll put one here. A price line, okay? A price line. A price line. A price line. And you may just look at it this way, okay? Say, well, based on my mindset, I believe this is a lot of consolidation, and then it broke down, but it didn't break down this far, okay? It didn't break down that far. Kind of got there a little bit, but not quite. It was a little higher. So even though we did consolidate here, you know, we broke out of that and we had to run up. We didn't even get here yet. And we're trying, but it's not quite there. We're having a little issue right here. Why are we having an issue here? Why are we having issues here? What is this possibly going to do? Because this looks more like a downtrend here. You know, my trend line's not great. This is like a downtrend here. Okay. So if it breaks above that, like it tried to do before, and it keeps going, and it knocks out this, then it keeps going, and it knocks out that, and most people say, well, shine. It seems like to me, I got a little area here. Oh boy, money zone. You might say, okay, this is the money zone. You might believe that's your money zone right there. Because you're saying, like, look, if it can get out of here and hold this level and get it as support, and hey, it can run up here. If this can break, you know, if this can break and get in here, I say, oh, it's the money zone right here. Money zone. You might look at it and say money zone if you can get here, but you might also say money zone here if it decides to what drop down. You might call this money zone because it still has to close. And sometimes y'all these closes can take. Look at here. I'm in August 15 of last year, trading all the way down, and it took all the way to November the 1st. I mean, excuse me, December the 1st from, excuse me, this is September the 12th to November 1st to even try to close that gap. So this stuff takes time. So we don't know how long this could drop back down to close this gap, or this could go up to close this gap. But this one has less resistance, and meaning that, in my opinion, it is closer to getting here. This has no complete hindrance either, but it's closer to this than this to that. But can something happen to make it just say, what did we see this morning? Gaps being closed, long widths. Sometimes it don't take 2 and 3 months or 6 months. It can take a pre-market before the open and close that gap, then close this gap, and then close this gap, and then close this gap, then close this gap. But what are you going to see in between that time? Price movement. It's not going to just go straight there. Boom. Unless it's something real strange happening in the world. It's going to do what it needs to do. It's going to go back and forth, back and forth, go back and forth, back and forth. Each candle represents a day. Okay? That's how long. Look, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3. Look, you have to understand the perspective of the chart that you're dealing with. Okay? That's why when you are trading, some people will have two charts open because they want to see what is going on during the market on this type of time frame versus all of this type of time frame. You don't always want to see that. You want to see this when you're trying to find entries or when you're trying to see just what's going on in the market without this just plain information. But this may tell you that this move up may be really a fake out because it's still in a downtrend on your higher time frame, which is what one of my other teachers taught me. If you don't see a move on a higher time frame that you see on lower time frame, even if that time on that lower time frame may be that this is occurring over 30 minutes, on that higher time frame they may still show If you in a bull run on your lower time frame and your high time frame is showing a bear, there may be a moment of you scalping, which 1 minute charts are for really scalping and entries. But true analysis happens at higher time frames, and then you find access to those entries at lower time frames. But if you got to move on the lower time frame, but you can't see it on that a good, decent higher time frame, 15 minutes, 30 minutes, hour, 2 hours, really 30 minutes, 1 hour on up. Some people still perceive a 30-minute chart to sometimes even be for scalping. But I really think 15 minutes can somewhat be a scalp, but I'm thinking 1, 3, 5, and 10 are too close, and they don't give you enough room to, you know, make a more long term decision. Um, if you're looking at a lower time frame chart and it's a minute chart, then you must respect the fact that you're not going to probably be in a position long before it may turn on you. Whereas if you're entering a position based on your um, higher time frame, you're more than likely going to hold that position because you're looking at the fact that you're looking at more detailed information and data that has been computed to give you these various candles. So if you were um, basically getting into these various positions and you were, looking at Tuesday, okay, and we're here. Let me see, make sure I'm on one day. And look at here. This is just the comparison. 30 minutes, 1 minute. You may look here and say, 10:01, 10 o'clock. Might get in here. Holding strong, holding strong. You're going to get out here. Then you say, well, I might get in, so a higher low. Pull back, still higher than that low. Staying in and staying in. Then you see the pullback here, because it was a pullback here, it still wasn't a low. So still on the uptrend. This was a low. Continue on breaking down. But you're looking at this over here, and you're like, is something's going on here? Yeah, we see a real bad drop, but we see a movement up going, in the pre-market. Like, look at the difference between this information and that information. So if you were holding off getting in a call until 10:30, based off of what you saw here at, let's say, 10:30. Okay, let me see, can I zoom in here? Okay, at 10:30, you saw this, but then that happened. But here at this 10:30, it was saying, don't pay that no mind, it's still going up. Here you are at 10:30, you could have got faked out right here. Then you missed all of that because you was not looking over here, weren't looking over here at this movement. Now, we still don't know what this candle was showing when this was active, but it still was an opportunity for a fake out. And then when people realized they was on the wrong side of the trade, they jumped on, and then it ran all the way up here to 400, all the way from a low of 398.43. Now somebody else saying, okay, it's going down. Oh no, a lower low. But then, no, okay. Oh, it's dropping down again. Oh no, oh no. Straight again. Boom. It's like you got to understand who you're playing against, understand what you're in it for, and focus in. And sometimes you end up playing these small stocks. You don't have to fool up with all these very expensive stocks and stuff like that. Sometimes they give you great opportunities. A low of 10.4, a high of 10.96. That was a 50 cent plus move. Okay, so that's well okay. Okay, now let's look at the grid. I don't know if it's gonna give me anything, but let's look at these supposed lows for today. Okay, we saw a low of 5 cents and a high of 24. So we're just going to assume, not necessarily the truth, that these were the actual lows for today. And as you can see, this really wasn't going to do you too much good here. But this movement here on out, that's okay. A low of 5, a high of 24. Let's just say it at best, there was really a low of 10. Okay. If it got to a high 24 and you had 10 contracts and you spent $100 to make $140, it's not the normal margin that we want, but it's still a decent profit. Now, some people are not going to do 100%, 120, 170, and 200%, and 1,000%. They are 30%. They are 20%. They believe in getting in the middle. They don't believe in extremities at the top and at the bottom. And they mitigate their risk. They control their portfolio, and they move on to the next. And they don't care about what's going on. You know, you don't have to get in too expensive stocks for big movements. Okay, this stock moved very well today. It is a $64 stock, give or take, and it opened somewhere in this area and went as high as 66.12. Okay, that's yeah. Look over here, 66.12. And then went as low as 63.81 at 4:30. Look what this chart would have shown you all day. You could have stayed in your put based on this chart. For the most part, like I said, we know this goes back and forth between green and red because it's giving out information. But look what this chart gave you all day. It still showed you it was in a downtrend. Now that part we can't basically, determine. But at the end of the day, you can clearly see that this was a downtrend, but it was still bouncing up, down, up, down, up, up, down, up, down. But here you just saw a clear drop. Okay? So that is basically what trading is. Now look at this craziness after the market. See that? Long stuff. Is this a technical issue? Is this a technical issue? Is this a technical issue? Anyway. But anyway, you guys, I'm done. I've been rambling and then I gave some small gems. But again, everything I talked to you about, it is not financial advice. It is my analysis and interpretation of stock market analysis and trading. So please understand that trading is a risk. You can lose all your money. You can lose all your assets if you do not know what you're doing. Please paper trade. Please study. Talk with individuals. They might can give you some nuggets and wisdom that you've never heard of before that may set you free. Take care and God bless you, and may heaven